Hi, good afternoon. Let's see, we have everyone here. Welcome to our session on climate DeFi and innovation, digital assets. So my name is Katherine Foster. I'll be your moderator today. I am a strategic advisor at the Open Earth Foundation, the Social Alpha Foundation, and the Digital Economist. I am also an advisor to the Bank of International Settlements, Project Genesis, the European Standards and Market Authority's Financial Innovation Standing Committee, and a board member of the EIT Food. I've had a previous life as a climate diplomat for Canada and the EU's Climate Kick lead, along with working with the UN Task Force and the Green Digital Finance Alliance, as well as the World Bank Blockchain and Carbon Markets Pilot. I'm calling in from Switzerland, but I see that we have almost global representation here. And I'd like to take the opportunity now to pass the mic directly to our panelists. And I think we'll start with a 2-minute introduction in terms of your names, your titles, and what you want to discuss today. And then we'll go through sort of, again, a round robin of discussions. So I'll start the introductions with Harry Brokert from Tree Economy.
Hi, thanks for having me on. Pleasure to be here. So yeah, my name's Harry. I'm the CEO and co-founder of a company called Tree Economy. Tree Economy is a carbon removal company building technology to more accurately calculate and track carbon removal and storage in nature-based solutions. So we have a primary focus on afforestation and forestry, but extending into some really exciting project types like rewilding and landscape scale regeneration. So our focus within this really is very high precision remote sensing, so that we can more accurately sort of track CO2 almost down to a tree by tree basis, and leading off from some of the previous call I was just listening into at the end there around the supply chain tracking and all that kind of stuff. So yeah, that's us in terms of areas of interest. Obviously, anything sort of carbon, Web3, crypto, that kind of convergence, but really specifically how we connect it to the real world, and I think that's a really important part that I'm keen to talk about, if possible, and sort of the broader natural capital ecosystem. So not just carbon, but carbon plus.
Wonderful.
Yeah.
Thank you very much. And I have to point out that you actually were with the EU's Climate Kick Accelerator. Is that right? At Imperial College.
That's
Great.
correct. That's where we learned the ropes.
Yes, wonderful. So I'll pass it now to Christian Crowe, CEO of Creole. You're muted. Not very well. Why don't we get your mic settled, and we'll pass it right now to Kapil Rathi, the CEO of Crosstower.
Hi, good afternoon. Kapil Rathi. I'm the CEO and co-founder at Crosstower. For those who don't know, Crosstower is a crypto exchange headquartered here in US, in New Jersey, and we also operate an exchange out of Bermuda. As related to this particular topic, I'm really fortunate to sort of have a chance to look into different type of DeFi projects or token projects that come to us as crypto exchange for listing. As part of the process, we get to take a look at, and there are some really amazing crypto projects that have come to my table. And then we also operate a financing business for Bitcoin miners, which, as you already know, has been a very sort of thorny topic. There is a school of thought that Bitcoin mining is actually anti-climate, but then I think we talk to many miners out there. We look into their risk models, we look into their energy consumptions, and it's just fascinating how the mining community, I think, is actually helping the climate. So I'm happy to share my thoughts here.
Great. I'm looking forward to coming back to that, and also to talk about NFTs and whatnot. But and on that point, we'll see if Christian's mic is now working.
Yeah, can you hear me better now?
Wonderful, super.
Fantastic. Yeah, thanks so much for having me, and apologies for the slight technical issues. Yeah, CEO of Creole. We are also Climate KIC alumni, of course, and met Harry at Imperial College as well. We are actually tackling two issues: that of access to and transparency of the carbon markets using IoT and blockchain. So we initially started and still are very much focused on the impact of buildings on the environment, and how we actually get people into that equation of understanding their impact and therefore affecting change. That's very much how we then developed some additional products of this kind of understanding of impact from businesses' perspective and private individuals. And now we are going on a further piece, which is to try and get some of the really great tools in blockchain that have transparency and trust further on down the chain into the actual production of credits themselves. So really trying to take that sort of trustless aspect from all the way up to the end consumer and all the way back down to the actual carbon projects themselves. And I'd like to discuss with the other panelists today, all aspects really of the carbon markets and Web3 and how that might help, and what indeed is the hindrance generally from the public's view of this application.
Wonderful, thank you. And yes, of course, Creel, I have to say, was one of our partners at Open Earth Foundation in our fundraise. So with our offsetting on an NFT drop. So that was a really important element, and that is supporting nested climate accounting infrastructure, which we're also collaborating with the UN. Now, last but not least, I want to turn the mic to Darren Wolfberg of Blockchain Triangle, who seems to be the sole person actually in Bermuda on this panel.
It's unfortunate because the weather's so nice here. But anyway, Catherine, thanks so much for having me. It's great to be here. Darren Wolfberg, CEO, founder of Blockchain Triangle. We are a digital finance platform for ESG and infrastructure assets. Our particular flavor of tokenization is taking smart meters and IoT devices and connecting those to digital assets, either creating digital twins of ecosystems of assets, or securitizing assets and raising capital. As a DABA registered entity here in Bermuda, we are one of the first broker dealers permitted to issue and sell digital assets. And we're really excited about the opportunity. We think there's a tremendous problem, and I'm sure, we can all agree, everyone on the panel here is kind of steering in kind of one direction, which is we got to fix the planet. And what's the best way to do that? And what's the best way to align incentives in order to get capital flowing in the same direction as climate? So with that, thanks for having me, and looking forward to a great presentation.
Absolutely, and I want to make sure that if you do have points, please just raise your hand virtually or physically if you want to ask a question of a fellow panelist. I'll try to orchestrate as much as possible without interfering too much. I think I'd like to go back to Harry, because to me, a lot of this, the discussion, we have a really nice arc here. We have carbon removal, natural capital, we have renewable energy certificates with Christian and different types of carbon credit support on chain. And then we have, of course, liquidity and then security. So this nice arch, and what we're finding in the ecosystem is much more of this type of discussing it into open integration, open innovation. But let's start with Harry and talk about, when blockchain came about, natural capital was also just becoming sort of a framework, grappling with its own framework. And I think blockchain really did help to address the issue of addressing assets, digital, physical, virtual assets. And I wondered if you could speak about that and how you came into this and where you're working in terms of the carbon removal elements.
Sure. Yeah. So, we see our position really in this entire segment, and I should state from the outset, at the moment, Treeconomy is probably a Web 2.0 company. Yeah. So we're looking to really figure out how do we integrate what we do into this wider ecosystem. We can definitely see how we do it, and we've got some active conversations going. But really, it comes down with those two bits. So one is how do we quantify the real world? So how do we unitize it? And this is obviously the most tangible piece here is carbon. So we have a set unit, which is a 1 ton of CO2 equivalent, is the fungible piece. And there's lots of different ways that we can interact with it. But really, for us, the way that we can see this and the way that we can see it interacting with Web3 and the whole natural capital refi piece is that you have physical, real infrastructure, green infrastructure in the real world, so trees, forests, that kind of thing. If we can accurately quantify and figure out how that fills up with CO2 over time, as kind of the visual image, and we can then begin to connect that directly on that one-to-one basis into the blockchain ecosystem, we're kind of moving towards this system where your sort of Bitcoin mine analogy is actually a tree. So as your tree grows and captures CO2, that's capturing CO2. That CO2 comes on chain, and that's then, and you can see that it's if you're a Bitcoin miner, for example, that's a whole business segment. Actually, now we can be a sort of carbon miner, but it's sort of negative CO2. So that's a bit that we see as super interesting. And then carbon is a perfect use case for smart contracts and blockchain-based technology, because we have this physical infrastructure asset. We have a commodity that comes out of it, which is carbon, but no one ever gets physical delivery of the commodity. Like if you imagine oil markets, gold markets, timber, whatever it may be, you have a commodity, you ship it, you do it. Even if you have derivatives over the top, if you hold oil until it sort of goes towards contango, then you're going to get a delivery of a barrel of oil. Whereas in the carbon market, you don't get delivery. So the trust element of holding a digital asset is imperative. So it's this two-way connection of, is it actually happening in the real world? And then do I actually own that thing? And the owning that thing is obviously where blockchain is in its own space and is the perfect utility. Yeah. Anyway,
and here I think the monitoring, reporting, and verification element of carbon is really going real time as well. So the integrated technologies that we have, geographic information systems, satellite imagery, and other types of measurements, and even being able to address local knowledge, which is becoming on-chain as well, which is a very interesting approach. So Christian, I'd like to then move it to you in terms of linking into the carbon markets and renewable energy certificates, etc., and how that sort of builds onto the dialogue here. And we'll come back to Harry on a few of the points he raised as well.
Yeah, I think Harry hit the nail on the head. I think what we've been finding is that anyone sort of within this space, bridging, if you like, Web3 and Web2, as Harry said, can only really call themselves a kind of almost like a Web 2.5 company, because we have 1 foot in Web3, but we also have to have 1 foot in the quote unquote real world, because we are dealing with assets, if you like, or elements that are actually in the real domain. Whereas truly Web3 companies, they make things that are purely in that domain and they never touch the real world and don't have to. But as Harry said, we find the perfect antidote to some of the problems that we first found in the carbon industry is blockchain, and is the use of the clever use of fractionalized NFTs, to show that provenance, to get rid of those issues of trust and transparency, to tackle some of those other issues that that there are lots of people who want to get into this space and they don't have access to the markets as easily as the big actors in the space. And therefore Web3 does lower those can lower those barriers to entry, and also start to look at, well, I'm not going to necessarily be an uptaker of several tons necessarily. So fractionalization was really important to us, to look at how you might take off little pieces of these larger chunks as smaller businesses or individuals. So yeah, really that I can't really say much more than that. Those are the kind of the pivotal pieces of how that fits together, really, I think.
Well, I think we should also talk about the fact that, in terms of carbon markets, voluntary carbon markets, we're talking about over 160 worldwide, and it's constantly growing. So it's a very fractionalized space, so that issue of being able to, if there's an issue of fungibility of the assets, but also in terms of access. And you talked about the fractionalization, but you can also have aggregation of these assets into other financial products going forward. And I think maybe Darren, we can move to you if you don't mind to talk a bit about that element.
Yeah, I think what is really interesting, you mentioned the number of different markets out there. The same way that you could have a BTC ETH pair, you're going to have similar pairs to that in this carbon world. And based on the standards that make up each of those ecosystems, because the data is on chain and because you have that history, you'll be able to easily convert one to the other and maybe even create arbitrage opportunities between that ecosystem of liquidity. How we think about it and really climate compliance, because, you need the capital behind the industry in order for the liquidity of the industry to flourish. And we look at the sustainability linked bond market, and we're going to talk about that more tomorrow. But that market is blowing up from 50 billion in issuance in 2018 to north of $1 trillion of issuance last year. And it's really become a catch-all for all different forms of debt. Now, that debt, the compliance part of that is what's your carbon footprint as a corporation, as a utility, as a government, as a bank. That ecosystem is really starting to sprout because compliance has been put in place in the EU and the UK. And I'm sure other jurisdictions are going to be not too far behind. And with that, you're going to have these pockets of liquidity that are going to be fostered by those that are long carbon credits and those that are short carbon credits. And in that, liquidity pool of those seeking liquidity and those offering liquidity, they're going to go to someone like Kapil and say, here's what I have. What do you have for sale? Or what do you have that I could buy? And that's what's exciting, because you're really starting to see this early growth of what I think is a $90 trillion climate resilient economy. And these are the building blocks in order to execute upon that.
Great. And I will segue to Kapil since you've done so, but I just wanted to note also a big advantage of this is, of course, the duplication element, which was one of the first problems we're trying to solve in the blockchain and carbon market space, right?
Just one comment. I think an important part of this is this aspect of greenwashing, and how does blockchain fit into resolving many of those challenges?
Right. Great. Absolutely. So Kapil, please, segueing into you in terms of what this means in terms of the marketplace itself and financing.
Yeah, I think I agree with everything that has been said so far. Of course, fixing the planet is going to be a costly endeavor. I think U.S. invests somewhere between 70 to 20% of its GDP towards sort of helping the climate-related projects, but there's a lot more work pending out there. Given, if you look at the fundamental of the blockchain technology itself, in principle, it is a better technology for tracking, managing, and capturing returns. The smart contracts allow companies to do things that were not easy to do at scale in the past. For example, if you want to track carbon emissions from single enterprise and matching those emissions with offsetting activities to verify that there is no double counting. So I think the blockchain technology and type of projects that we've been kind of reviewing every day when it comes to trading on an exchange, we look into their white papers, we look into their utilities. There are some really, really smart people who are doing some creative things, especially in the DeFi market segments, by using oracles and the external auditors. You can bring more and more transparencies. We talked about fractionalization. Some of this was, we've been trying these things, but blockchain actually had made it very easy. One particular project that I really like is I believe it's called Climate Token, where they actually provide a sort of real-time pricing information and a public record of trades that match the credit with the projects that are funding them. This token concept helps the climate by reducing the availability of carbon credits and eventually creating a market, centralized market, which is in a decentralized world, which is not fragmented. Everything is trading on blockchain. And I believe Mark Cuban actually went into this project. He didn't disclose how much he owns, but the market is, and the VC space is realizing the value of these type of projects. So lots being done, and really technology is playing a big role.
I'd like to talk about Climate DAO because I think it's one that has really been in the headlines and, of course, in a lot of our discussions lately. But I'd like to also then come back to sort of this ecosystem that we have even represented right here. But Christian, why don't you give us some thoughts on Climate DAO?
Sure, thanks. You've landed me straight in it. I was lucky enough to be a consultant early on and continue to be a consultant for KlimaDAO. And as you say, the sort of main mantra, if you like, of that organization is very much democratizing access and primarily trying to put value back into something, the environment, which has over time seemingly been devalued. One of the, and just quoting their initial, one of their initial pieces is that the Amazon only seems very brutally to have value when it's actually stripped of all its land and all its assets and then used for other purposes. And so therefore, the primary purpose of that organization was to really try to leverage the markets back into the environment and use that kind of positive flywheel that actually, this old idea of this Protestant idea, if you like, of environmentalism having to hurt yourself to do good, didn't have to be the case. That there could be this marriage of the two, where actually you can start to get this kind of hedonistic sustainability where actually doing good can actually also be good for you. And so when you marry the markets and environmentalism in the way that they manage to do, you get that flywheel where the DeFi and the what's now be called the refi markets, which came out of this, actually start to push up the price of these aspects. And I know I shouldn't be necessarily talking about these things, but there has been articles now which have talked about the fact, as far back as in November of last year, when it was just about a couple of months old, that it had the effect of pushing up prices by 63% in the real world. So it has been proven to be an accelerant of prices. And the reason for that being a good thing in terms of what they were trying to do is they wanted to drive up the price, both to sustain more projects, but also more importantly, to start to spark that debate between businesses that actually, well, rather than buying myself out of my sustainability problem, maybe I should actually look at becoming more efficient instead. So, there's less of this kind of like, well, I'll just buy more credits, and that, as I'm sure Katherine can attest to, is really the primary thinking now of environmentalists, that we can't buy ourselves out of this problem. We can't sort of borrow these credits to offset our impact. We now actually have to really seriously look at reduction, because even if we do invest in all these wonderful afforestation and green projects and carbon capture and such, that we are now at that tipping point where potentially temperatures could be at such a detrimental point that by the time all these projects start to really look to benefit, they could actually be harmful. And so that's something we really have to think about.
Absolutely. I think we should always start at the core of what we're discussing here. So KlimaDAO, in terms of what a DAO is, distributed autonomous organization, and also the governance elements of that. And as you mentioned, the rise of carbon pricing. Does this have a risk of certainly redefining in a positive sense, but are there unknown risks that we can talk about? And I'd like to come back to Harry, because this, of course, represents the Web3 type of environment that he's talking about, virtual environment, and how that interfaces with where you want to go with tree economy.
Yeah, so I mean, we've been following ClimateDAO for a while. I'm similar to what Christian was saying. I think it's disruptive, and I think it's in a good way for sure at the moment. And I think that's powerful because that theory of change. If we can increase the carbon price, then that's great. And if you look at so I did a bit of work as a consultant a couple of months ago, about a year ago now actually, with a company called Trove Research, where we looked at global supply and demand modeling within the voluntary carbon market. And what we found was there was this enormous surplus of credits that was sat within there. It was about 800 million tons, I think, from memory, or something along those lines. And basically what that was doing was just having that massively depressive effect on price. So I mean, if it was genuinely, if the price for CO2 is genuinely $10 per ton, we could combat climate change quite easily. Like that's very, very low pricing, artificially low, and clearly the market's not having an effect. So what they're doing there and sucking that out is quite powerful. I suppose the question there, Katherine, was really around sort of where are the risks with this potentially, or is that what you're leading on? So yeah, I mean, the risks. I mean, there's two sides of risk. Risk in the sense that money is at risk with these things, and everything is fluctuating, and at the moment the liquidity within these market spaces is thin. And there is a risk there, obviously, of capital loss, but also that it doesn't work. Because of that. Now I think there's some very smart mechanisms being worked on, and liquidity staking and all those various things are smart. The market is learning and building. But the other side of this, frankly, is the risk is that if we don't take action, then bad things will happen. So I think actually we've been doing a lot of research on this, as I've been saying. It's part of our business model is to pivot into this sector. And a lot of that obviously is assessing what could go wrong. There's reputational pieces, but frankly, the voluntary carbon market, which is what we're talking about, has a lot of its own reputational problems anyway. And actually, this is beginning to fix it. So we're starting from quite a low base, which means the risk on these things is actually relatively low at a sort of structural concept, if I put it that way.
Right. I think I was referring also to sort of, the governance elements of DAOs. And if you go onto the Discord channel, it's a web, it's an incredible web, and trying to navigate that. So in terms of as these types of infrastructures grow and how we're going to actually make those informed decisions within that is one element of it. But also, are there, unknown impacts? For example, are we creating another type of digital divide where certain projects and areas and regions and actors cannot participate in this type of infrastructure and ecosystem? But I want to move on and Kapil and bring in Kapil and Darren now, because this is impacting the market and liquidity, and it is actually sort of bolstering the broader market as well. So Kapil, I'd love for you to take us through a bit of a dialogue around what this means in terms of the ecosystem of liquidity in a way.
Yeah, actually, before I jump into that, I just want to touch upon the governance part that you mentioned in terms of does it really allow broad participation? I mean, if you look at most of the geoclimate issues, there's a lot of politics involved into it. And we sort of end up, the countries and the governments have so much control right now, and they end up in forcing the politics into climate issues. And we've been just talking about this for the last 10, 15 years. What I like about these DAO projects is the entire concept of governance is flipped upside down. It's the power is now to the masses, and even to the local communities. If I don't like a project that's going to hurt my community, I should be able to control the governance of that project or the countries, right? So I think just the blockchain technology itself, the concept of financial equality, there's a lot more use cases that you can do, especially in the climate, beyond just finance. So it's really fascinating.
Yeah, I agree. And as I call myself a recovered climate diplomat because I was there 30 years ago for that reason. So I'm not suggesting one way or another. And what I meant in terms of a divide, I meant in terms of if you look at use cases of Algorand or KlimaDAO or others, when you look at regional use cases or actors, Africa's at the very bottom. Right. So does that mean in terms of the actors, of the stakeholders, of the projects themselves? So, but I don't want to detract from continuing the discussion. So I'd like to pass it back to you, Kapil, and then to Darren as well.
Yeah, I think from a more liquidity perspective, goes back to the fragmentation. We've been talking about the credit market for almost 10, 15 years. The VC space is actively looking at it. It's very easy to raise capital if you have a project. So overall, we're building a much more healthy financial system from a liquidity perspective, so these marketplaces can develop. Darren, look forward to hear your thoughts on it.
Yeah, and I think everyone's making great points. I think one of the biggest points, and maybe it's just really fundamental. I think we're approaching that tipping point where you've had this 30 years of work and research that has been put into this topic. And now you're starting to see the sense of urgency. And now you're starting to see the capital flows. And when you have firms that like BlackRock that have north of $10 trillion saying that they're going to be 100% ESG invested by 2030, that is a massive amount of capital that is going to, the saying in finance is rising tide lifts all ships. Well, guess what? The green tide is going up and the brown tide is going down. And cost of capital for brown is going to continue to widen. It's going to continue to get more expensive. And all of this together, corporations have to update how they account for GHGs or CO2e. And all of this climate accounting, the same way that you have a currency desk and for a multinational that is selling products in many different jurisdictions, you're going to have climate and RECs and offsets as part of that ecosystem, all supported by data and all supported by data that's on chain, referenced, and accessible. So I am actually terribly excited about the momentum that's in the space. I feel like the world has awoken to this. And I'll also say, and we have parts of our team in Ukraine. What's going on there is supportive of this. Energy independence, energy self-sustainability, that's only going to be driven by renewables and getting off of fossil fuels. So I think that, we are very much, the snowball is going down the hill and it's going to get bigger and it's going to get bigger. And I am excited for the amount of liquidity that's coming to the market. Again, our specific focus on this is really aggregating the data because the data ultimately results in the compliance and what are the RECs you need to buy and what are the RECs you have for sale.
Mm-hmm. Absolutely. There's a comment and I just want to reach out on that point because I think it's important as well that, up until now, we've largely been talking about offsetting and as I've said before, sometimes this is like talking about brushing your teeth while you're still eating cookies. Let's talk about some of the other type of projects and initiatives that can be supported or are being supported actually. So resilience and other initiatives. So Harry, I think you actually are pursuing some in this area as well.
Sorry, the initiatives around which?
Regenerative projects and natural capital isn't just about offsetting. So I think we just want to clarify a little bit about that.
Yeah, completely. And I think this can get very focused again because we're talking about commodities and units and tonnage, and it all revolves around this carbon concept. And it makes a lot of sense because it's the easiest first mover piece. But actually, you see a lot of people, especially now in that kind of crypto refi space, talking about natural capital, but then all they actually end up doing is really talking about carbon. So what we're looking to do with our work is again, if we can count it and we can quantify it, we can begin to at least sort of track it. And then if we can track it, that can be brought into financial considerations. I think it may well be a step too far to say that you can actually price biodiversity as an example, because, well, frankly, we can't even really define what biodiversity is in many cases. How do I compare biodiversity in Ecuador versus the UK as an example set? So there's those, but if we can at least quantify and track it, then we can build this in. So one of the things that we're particularly passionate about now is pushing forward rewilding and regenerative landscape projects. These are schemes that are inherently more complex than, let's just say, afforestation or even sort of something like avoided deforestation schemes. Partly because they're often mosaics of landscapes. You've got different sort of ecology types meshed in and next to each other, but also because a lot of the time, so long as they're truly additional and you're taking an action, they're transient. They're actually changing and they're dynamic. So again, it's how do we use new technology, drone-based point cloud data, satellites, and then machine learning to actually analyze that, to quantify, and then to be able to put that into a marketplace that is trusted, and whereby we can count it. But also, if something goes wrong, we can tell you that it's no longer there, and we can delete them. And that is just as powerful. And that's that's an area that we're very excited about.
Yeah, and I think the focus on carbon counting is because of Paris and the agenda that we have set, both for voluntary and regulated markets. And we do have this massive, global stock take coming up where we're supposed to measure the progress we've made. But if we don't have that data, if we don't have all of this readily available and formatted, we're not going to be able to make that measurement and assess our progress. So I think that's a big part of it. And this speaks to the integration that we're seeing in some of these projects here as well. I think, Christian, you looked like you were about to say something on the variety.
Yeah, absolutely. I know Harry knows that we're hopefully close to chatting sometime about exactly that in terms of digitizing at source and trying to get that transparency and if you like the oracles right down to the point where companies like Geoconomy are and others to really take that guesswork out, and also if you like that questionable piece of did this actually happen and did it happen the correct number of times or even at all, and I think that offers up a piece that others have talked about, the idea of digitizing the world, if you like, and producing these digital twins. So that's something that we've been looking at in terms of creating with our IoT and linking it to what's called zero knowledge proof in blockchain. And actually creating, the ability to oracleize this at source, and also, if you say in that mapping process that companies like Treeconomy do, making sure that gets embedded into the metadata, so that if someone tries to map that again, or if you like tokenize that again, then it says no, I'm sorry, that already exists, and so therefore denied. So hopefully that's a further strength of Web3 that can start to get rid of all those elements of mistrust, or some of them at least. We've certainly been working with that in some of the poorest regions of the world, in Africa, to try and work with that kind of technology, and we'll bring that out in a few months' time. So we'll write a piece on doing exactly that.
Mm-hmm. And I think, this also speaks to some of the sessions we'll be having tomorrow around, integrating SDG and other types of data. We only have 2-3 minutes left, so I wanted to give Kapil and Darren a last minute or two to take it into sort of their realm as well, with what this means in terms of their ecosystems and their work as well. So let's go to Kapil or Darren.
Yeah, I'll just take 1 minute to sort of address the whole issue about energy consumption tied to Bitcoin mining. I mentioned.
Yeah.
Well, it's funny when it comes to mining that there are two variable factors. One is the hash rate, and second is the power. And what Bitcoin mining community is doing to actually reduce the power cost factor and investing in the renewable energy, looking at alternate ways. It's I think long term, the Bitcoin community or the blockchain community is going to end up in helping the environment because there are economic direct incentive to them. So I want to just get that out there. So
yeah, and we're steering a big ship here.
Continued with Mr. Elon Musk, who's pushing another agenda. But,
yeah, and I can tell you the European regulatory space is quite a little battleground right now. So that's interesting to see. Darren, yeah, so thank you, Kapil. Darren, let's pass it to you for a final word as well.
Yeah, no, I think we're just very excited to be really at the doorstep of what is an entire new ecosystem of opportunity for corporations, for governments. I think what you're seeing a lot in DeFi and what ClimateDAO is doing specifically, I think provides liquidity and access to individuals to express themselves as they want. And it's that kind of tipping point that you're seeing with retail access to these products that's going to drive more liquidity. And with that, as corporations get into it, I think it's tremendous opportunity for people to be buying carbon credits today as an asset class, because I do see it going higher. And if you think it was, worthwhile to buy Bitcoin when it was $100, I think buying carbon credits today is, analogous to that, because this economy is just getting going, and we are not even through the first out of the first inning of the game. This is a 30-year trade, and it's just getting started, and you're starting to see massive capital flows come into it. Governments are starting to act. And I'm, just exceptionally enthused. And I think, we're going to be working with partners like everyone that's on this panel in the future, and collaborating and seeing how, we can help one another with opportunity.
Absolutely, thank you. And I think when we see, what's happened in the U.S. today with the Bank of, as well as the Bank of International Settlements and the UN, all sort of entering into this space, and with regulatory sandboxes and innovation support, we're really
and they
seeing
all need solutions. Everyone needs a solution,
Yes.
And there are many different solutions that need to be put together. And I think you've got your early developers of those solutions, and those will iterate and they'll get better over time.
And integrate. Yes, well, I'd like to thank you all for taking the time to speak with us today, this evening. And thanks also to the sponsors and to the host. Really appreciate your input. It's just the beginning of this excellent conversation. So thank you, and we wish you all an excellent day, evening, and week.
So long,
Thank you
everyone.
so much.
Thank you.
Thank you. Bye for now.